The 2008 financial crisis was a result of the collapse of the housing market and the subprime mortgage industry. Banks issued risky mortgages and packaged them into securities, which were sold to investors around the world. When the housing market declined, homeowners defaulted on these mortgages, causing the securities to lose value. This triggered a wave of mortgage foreclosures and sent the financial system into a tailspin, leading to the collapse of several large investment banks. The stock market suffered massive losses, with the S&P 500 falling by more than 50% from its peak in 2007 to its bottom in 2009. The crisis had far-reaching consequences, including a global recession and widespread job losses. The government responded with a series of rescue packages and policy measures aimed at stabilizing the financial system and restoring confidence in the markets.